All right, so here are the 24 dividend paying stocks that I own. Now, some of these stocks I've held for a year, some I just bought, but in this video, I will tell you the stocks that I own that pay dividends and how much I would get if I keep them for a year. All right, so the first dividend stock that I own, 1 out of 24, is Dividend 15 Split Corp, DFN.TO. This is a mutual fund that invests in big banks, big Canadian banks, that pays dividends, of course, but the way that they're able to distribute a 10-cent per share per month is by selling covered calls on their positions. So the current yield right now on this stock is 13.95% per year. They pay monthly dividends of 10 cents per share. So here's a list of the stocks that I own, and it's sorted by the highest yield. And as you can see, my yield on cost is 15% because I bought the stock at $8, but the current yield right now is 13.95 because the stock price went up. Now, this is a stock that I will probably keep forever because of the 15% yield that I'll be getting. They have never missed a dividend payment. Now, initially, I was going to sell it at $10 and make a capital gain, but now I'm realizing that it might be hard to make 15% per year. So if I can find something that guarantees me 15% per year, I will take it. Although there's not much capital appreciation because this mutual fund usually trades around $10 flat. Although I did buy it at 8, so I guess I would get about 24%, 25% capital appreciation when it trades to its normal value of $10. But the real advantage is the 15% yield every year. So the next stock I got that pays me dividends is a REIT, Real Estate Investment Trust, called New York Mortgage Trust. This is a stock that I bought at $6. It pays, current yield is 13% per year, and it pays the dividends every 3 months. There hasn't been much capital appreciation. As you can see in the past year, it's been trading between $5.35 and $6.54. If you look at the past 5 years, it was trading at $7.55 back in 2015, but since 2016, it's been trading between $4 and $6. If we look at the max, of course, before 2008, it looks like it was trading at 100. I don't know if these are true values or there's a mistake in the chart, but if that's the case, then this is something worth holding on forever in case it goes back to these numbers again. But obviously, 2009, this stock dropped to $2, but it's been trading at $6 on average since 2009. Regardless, it pays 13% dividends per year, and my yield on cost is 13.33 as well. The next stock I have that pays me dividends is Vermilion Energy on the Toronto Stock Exchange. Current yield right now is 9% per year. This is a monthly dividend. 1 year target price is 43, so there's room for capital appreciation. My yield on cost on this is about 8.49%. Current yield is about 9%. Got 61 shares. I bought it at 32.5 and it's currently trading at 31. So I'm down on the stock, but I'm collecting about 9% dividends per year. My next stock is Blackstone Group. Bought it at 32.5. It's trading at 33. This one, I also had the intention of selling for a capital gain, but I might just end up keeping it for the dividends. Current yield is 7.76%. Yield on cost is 8%. So 8% per year on this stock. 1 year target price is 39. If you look at the past year, you can see it was 52-week high was 39 as well. If you look at 5 years, I mean, the highest it has ever reached was 43. So it's pretty stable in the 30s. I don't foresee much capital appreciation. So it's probably something to keep forever just to collect the 8% dividends. Next stock is Ford, of course. Current yield is 6.77%. 1 year target price is 9.32%. 1 year target price is 9.32. This is a quarterly dividend payment. 52-week range of Ford is 7.41 to 12.15. Now I bought this stock a little bit too high. I bought it several times, but on average, I bought it at around $9. 220 shares. So yield on cost is about 6.67 and current yield is 6.77. My next stock is AltaGas that I bought at 14.5. 1 year target is 19.2. Current yield is 6.88%. Now they used to pay more, but they actually cut their dividends. They started off, I think it was around like 11% per year, but now it's down to 7%. So my yield on cost is 6.62%, and this is a monthly dividend. 52-week range is 11.87 to 28.45. This one has good room for capital appreciation, but it might take a while. Next stock is AT&T. This one I'm very confident in. 223 billion market cap. It's a huge company in the States, of course. I'm not worried about it. 1 year target price is not that high, only $34. I believe I bought this at 32. So yeah, cost of 32. So yield on cost is 6.38. Current yield is 6.67. And of course, it's a quarterly dividend. So this one I'm not sure if I'm going to keep forever. Might sell at a decent capital gain. But while I'm waiting, I'm collecting decent dividends. Next stock is Enbridge. This stock I bought several times, but every time I bought it a bit too high. First time I bought it was at $50, and then I believe 45, and then 42. It went all the way down to 37. I did not buy it at 37, but this one pays. Current yield is 6.21%. Yield on cost is 6.3 as well. So I'm getting about 6% from this stock. This stock I've held for easily over a year. And as you can see, the past year been trading between 37 and 48. If you look at the past 5 years, the highest was 63. So this is a long-term stock for sure. It's got potential to go higher. 96 billion market cap, but definitely bought it a bit too high. Had to keep it for a year, even if I had unrealized losses on it, but collected easily 6% dividends on that stock. So next stock is Macy's. This is a stock I recently bought about a month ago. Pays close to 6% dividends. I bought it in a dip when it dropped after earnings. 52-week range is 22.47 to 42. I bought it at around 25.8. So my yield on cost is 5.85. Current yield right now is 5.92. So I'm not sure if I'm going to keep this long term or not. I'll try to keep it as long as I can. But at some point, if I have a decent capital gain, I'm going to sell it. Because retail is just not too encouraging right now. Although I really believe in Macy's. I really like Macy's. I think it's too big to just disappear. But if people prefer to shop online, you can't control that. So I'm not good at predicting the future, but I know Macy's is a great company and that's why I bought it. And it pays very good dividends. Next stock is TransCanada Corporation, TRP.TO. I bought it at 51. So my yield on cost is 5.41, but the current yield is 5%. 1 year target price is 63. So this is a stock I'll try to keep until I make a decent capital gain on it. I don't plan on keeping it forever. And while I'm holding on to it, it's paying me 5% dividends per year. In the past year, you can see it's pretty flat. Past 5 years, the highest was 60, but it's always growing. It's always going up. In the long run, it's always going up. So next stock is Vodafone. I bought a bit too high. I bought it twice. Once at 23, and another time at $18. So my average price is around $21. So my yield on cost is 5.19%, but the current yield is 6%. This, I believe, is a yearly dividend or twice a year. It looks like it's a yearly dividend. So I'm gonna have to hold it a bit longer before I collect my first dividend. 1 year target price is 25. So I'll probably hold on to it until I can sell it at a decent capital gain. I don't plan on keeping it forever. You can see the past 5 years it's been dropping steadily. If we go even further, hard to notice a trend, but 2009 to 2014 it's been in an uptrend, but then after that it's been in a downtrend. And the highest it has ever reached was back in 2000 at $66. Next stock is General Mills. I bought it at 41, currently trading at 43.55. Current yield is 4.53. 1 year target price is 44.67. So my yield on cost is 4.78. Not sure what I'm going to do with this stock, if I'm going to keep it long term or just sell at a decent capital gain. 52-week range is 36 to 60. If you look at the past year, it was the highest it was. The highest it was trading at was $60. If you look at 5 years, yeah, you can see there was an uptrend in the first 2 years and then a downtrend after that. A big downtrend actually from 71 to 37. So who knows if this is the lowest point. So might get out of it when I get the chance, but while I wait, I'm collecting close to 5% dividends per year. So the next stock I have is Bank of Nova Scotia. Bought it once at 76 and another time at 71. This one current yield is 4.62. 1 year target price is 83. My yield on cost is about the same, 4.66%. Now this is a great Canadian bank stock. I'm not worried about it. This I have no problem keeping forever, as it'll just continue to grow. As you can see in the past, since 1995, it just keeps going up over the long run. and the dividends are increasing year after year. So back in 2014, they were paying 64 cents a share, but now they're paying 85 cents. So it's not a crazy increase, but it's still an increase. Next stock I have that pays me dividends is Qualcomm. Bought it at 54.5, and I've got an order to buy some more at 50 if it goes through. Current yield is 4.79. My yield on cost is 4.55. I've got 18 shares. So Qualcomm's 52-week range is 48 to 76. So this is not something I'd probably keep forever. So I'll just keep it until I can make a decent capital gain and sell the stock. And while I wait, I'll be collecting decent dividends. So next stock on the list is ExxonMobil. This is obviously a very safe stock, 300 billion market cap. Current yield is 4.57. 1 year target price is 82. Yield on cost is 4.37. If you look at the past year, been trading between 89 and 64. Past 5 years, you can see it's on a downtrend. If you go even further, hard to explain what this is, but definitely one of the stocks that I have no problem keeping forever, because over the long run it will continue to go up. Got Orange. Next stock is Orange, so a competitor of Vodafone. Current yield is 4.45%. 1 year target price is 21. This is a stock I would probably keep until I can sell at a decent capital gain. I don't plan on keeping it forever. So my yield on cost on Orange is also 4.32%. Past year it's on a downtrend. Past 5 years is relatively flat. Yeah, back in 2000 it was trading at 164. It looks like a similar chart to tech companies. All right, next stock is BMO, Bank of Montreal, another great Canadian bank stock. Current yield is 4%. 1 year target price is 110. My yield on cost is 4.3. Not sure how long I'm going to keep this, but it's a very safe stock to keep long term. If you look at the past 5 years, it's been up from 72 to 96. So it's over the long run, this stock is always going to be going up, but the growth rate might not be amazing. So obviously, if you look at the past 24 years, it went from 13 to 96. So I don't know yet what I'm going to do with this, but while I'm deciding, collecting 4% dividends per year. Next stock here is CI Financial Corp. Bought it at 17. Current yield is 3.89%, so my yield on cost is 4.24%. I recently bought this stock, so I did not collect a dividend payment yet. 1 year target price is 20.88. So as you can see in the past year, it's on a massive downtrend. Past 5 years as well. So yeah, this is not something I plan on keeping forever. I'll sell when I make a decent capital gain. Got Kraft Heinz that I bought way too high. Bought once at 75 and then another time at $50. 1 year target price is 56. Current yield is 5.35, but my yield on cost is 4% because obviously I bought it at 75 the first time. No need to talk about Kraft Heinz. It's a stock on Warren Buffett's list, and it's a big company. PE ratio is pretty low, 5 multiple. So yeah, I could probably keep this for a very long time and collect the dividends. Next stock is Honda Motor Company. Bought it at 29.3, I believe. Dividends of 3%, which is not great, but not bad either. 1 year target price is 35. Really, the reason I bought Honda is because I love the company, I love the product, and their revenues are ridiculous. So all the numbers here that you see are in thousands, but the currency is in Japanese yen, so it's about 100 US. So instead of multiplying by 1,000, we're just going to multiply by 10. So revenue for 2018 is 150 billion. And as you can see, it keeps growing, but 150 billion revenue, and profit is 10 billion profit. So with numbers like this, really nothing, it's hard not to invest in a company like that, especially if you like their product. Regardless, it pays 3%, but this is not something I plan on keeping forever, but I have no problem keeping long term until I make a decent capital gain. So next stock is Barclays. This I definitely want to get out of, but I'm waiting to make a decent capital gain, and while I'm waiting, I'm collecting 3%. This is one of the biggest banks, if not the biggest banks in Europe. So past years on a massive downtrend, past 5 years as well. But at the end of the day, it's a big bank. As long as they're not involved with scandals and frauds, they should recover. So my yield on cost is 3.25%, so pretty close. I bought this at 8. Probably try to sell it at $9 if I can. Next stock is JP Morgan Chase, 3% dividends. I bought it at 103. It's trading at 103, so my yield on cost should be the same. Yeah, 3.11. and it's got a 1 year target price of 116. So 1 year is pretty flat, but 5 years it's been growing. So this is a stock probably not going to hold forever, but I have no problem holding long term until I make a decent capital gain. Next stock is Intel, pays 2.55%. I just recently bought this at 46. Love Intel as a product and a company. 1 year target price is 52. So it's been up and down like most chip companies. So past years you could see it's up and down. Past 5 years it's been growing. So I've got no problem holding on to this, but I will probably sell it at a decent capital gain as well. And then my final stock is Dollarama. That doesn't really pay much dividends. Maybe I shouldn't even consider it. 0.5% per year. 1 year target price is 41. I bought this twice, once at 40 and once at 35. So my yield on cost is not even 0.5%, it's 0.43%. Got 61 shares, but I'm confident that the stock will go back up. If you look at the past year, it dropped hard, but in the past 5 years, it went from 14 to 52 and then dropped down to $30. So as you can see, most of these stocks, out of the 24 dividend paying stocks that I have, I'm probably not going to keep all of them forever. So I do collect the dividends and reinvest the dividends, but not all these will be kept forever because I don't think there's much growth potential. I'd rather take the capital gain and buy something else that can generate more than just 5% per year. So as you can see, my average yield here is 6%, because obviously some pay me 15, some pay me 8, some pay me 6, some pay me 4 and 3%. So the stocks that I would probably keep forever is this one here, DFN.TO, New York Mortgage Trust as well, Kraft Heinz, maybe Honda Motor as well, just because I like the company. Bank stocks as well, Bank of Nova Scotia, BMO as well. And I think all the rest, when I have a chance to sell them at a decent capital gain, I will. The ones highlighted in yellow are the ones that I plan on keeping forever. And so here's the dividends that I would receive if I keep these stocks for a year. So the total that I would receive is $2,600 from a $47,000 investment. So an average yield of 6%. Now this is a combined US and Canadian. I did not convert the US to Canadian, so in Canadian this is actually a bigger amount. But the idea is I'd be getting 6% yield on a $47,000 investment. So yeah, so these are the 24 stocks that I own that pay dividends. So if you want to share your opinion, leave them in the comments below. If you want to share some stocks that you own that pay dividends, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get between $25 and $250 back. Or if you prefer $50 in free trades, use my referral link also in the description below the video. And check out the other referral links in the description below the video to help support the channel. Thanks for watching.